So today was a huge day for the overall market as well as for Tesla stock, as of course today we had the Federal Reserve make an update in its monetary policy, as well as hearing the press conference from Fed Chairman Jerome Powell. Now recently I told the Push and Profit Private Group that the consensus was a 99% chance that the Federal Reserve was going to hike by an additional 25 basis points. And that is exactly how much they hiked by. But I told the Push and Profit Private Group that it's not only just how much the Fed will hike or if they will pause, but also hearing the tone from Jerome Powell going forward. Now, once the market heard Jerome Powell start talking, initially the market started rallying up as a lot of the comments from his mouth came out bullish, as he mentioned that there weren't really much plans or definitive plans of hiking any additional times going forward. However, if we zoom in, we saw that the market sold off as we got closer to the end of the day, but then of course we did rebound off of that. Now in this video, I want to go ahead and break down why we saw some selling off, and then also go ahead and talk a little bit more into Tesla as we move forward, and kind of just cover Tesla both from the perspective of someone who's trading Tesla in the short term, but also from the perspective of someone who's investing in Tesla in the long term. Now, a key concern as to why markets started selling off today towards the end was simply because Jerome Powell emphasized on how history shows a likelihood of softening in the labor markets even if monetary policy pauses are more frequent. Now, this is because we see the trend of employees quitting their jobs decreasing alongside the decrease in job openings, which means that, eventually we're going to see an increase in the unemployment rate in the near future. Now, obviously, if unemployment increases, this is bad for the market simply because we know that consumer spending accounts for over 70% towards the GDP. So we know if individuals are not working, well, that means they're not going to be spending. And if they're not spending, well, that's bad for corporate earnings, right? And of course, what do investors pour money into the stock market for? Well, to see a return on their investments. Well, if, their investments are not returning because corporations are not making their money because people are not spending, well, what does that tell you investors are going to do? They're going to start selling. Now, this aligns perfectly well with what I've been telling the Push and Profit Private Group recently about how we're seeing a lot of earnings currently right now either hit or miss, but as we get closer to Q3, that's when we're going to see more misses in the earnings. Now, before we go ahead and hop into my laptop and talk about Tesla, I want to show you guys this chart right here, just showing you guys all the previous rate hikes that have been done by the Federal Reserve, including the one that was just done recently. And one of the things I've been telling the Push and Profit Private Group repeatedly is the fact that it takes time, right, for these rate hikes to actually bleed into the economy. In fact, we heard Jerome Powell mention that today, that it does take time for this to eventually, make its way into the economy. And so far, we've really only experienced about 4 of the rate hikes, right? Because it takes typically about 1 year for the rate hikes to, impact what's going on. So we've really only felt the 25 basis points, the 50 basis points, and then the 2 additional 75 basis points, which is really just 42% of what the Federal Reserve has already done. So just to reiterate that, we've only really felt only 42% of what the Federal Reserve has done in regards to monetary policy, and we have a whole bunch more of previous rate hikes that are going to make its way into the economy. And so this is not really a good thing, because obviously this is going to continue putting pressure on consumers, and this is why we're going to see unemployment start spiking up. We're already seeing the trends kind of lead to that direction. But with that said, I want to go ahead and hop into my laptop and cover Tesla a little bit more deeper. Alrighty, so we are officially in my laptop. We're taking a look at Tesla stock from a weekly time frame, and I started off the video covering some updates in monetary policy, as well as talking about some macroeconomic trends, which may come off as unique or simply different because a lot of the other individuals that you may follow here on YouTube or any other platform that talk about Tesla stock really only covered Tesla stock from three different perspectives. One, from a technical perspective, just looking at the charts, or someone who's only covering the news, just talking about the catalyst events for Tesla, or someone who talks about the fundamentals, right? What the company is actually doing as far as its business model, right? And those, although are great data points that you want to follow, I take a much more holistic approach where I look at those data points as well, but I look at several other data points in addition to that, right? Like I started off the video with monetary policy, etc. And I think it's easy for us to all agree that having more data is much more valuable, right? In last week's video, we had the earnings for Tesla, and so I covered some of the things in regards to Tesla's earnings. But today, I wanted to talk about monetary policy because last week I told the Push and Profit private group that this was a huge week, right? Especially from a data perspective, right? As someone who frequently advocates for being data driven, I wanted to emphasize that this is a huge week simply because of the update in monetary policy that I covered earlier in the beginning of this video. But along with that, we had earnings from three of the biggest tech companies, right? Microsoft, Google, Meta, right? These three, tech juggernauts that have a combined market cap of nearly $5 trillion. And so, I know we're talking about Tesla in this video, but we also have to talk about these other, tech giants as well. And you may be asking why that's irrelevant to Tesla. Well, one of the things I told the Push and Profit private group, right, was that a lot of these tech giants have, reaped considerable benefits from the AI buzz, right? Including Tesla, right? Tesla in the last quarter was one of the stocks that was considered an AI play. In fact, I mentioned that a couple months ago, right? Along with Microsoft, Google, Meta, all these, tech stocks rallied up with the, buzzword of AI. And so, hearing from the earnings of Microsoft, Google, and Meta is important, right? Because, it's important for us to understand where these stocks are in regards to revenue or outlook on revenue from AI, right? Because of course, if these companies had bad earnings, right, or bad forward guidance in relation to cloud computing services, right, or AI, well, this was going to kind of spill the beans of what we're going to be seeing in the future. So if we kind of just go into Meta, right, one of the things we saw with Meta, which just released its earnings today, we haven't heard the earnings call as of the recording of this video, but Meta did exceptionally well in its earnings, except for the fact that it's continuously losing billions of dollars in the metaverse, right? And so we could see that, Meta is just struggling with that whole sector, and a lot of investors are kind of saying, hey, you should probably stop focusing on the metaverse and continuously focus on AI, right? So that was what we saw from Meta. Now, if we kind of focus into Microsoft, we saw that Microsoft had their earnings and they fell down, right? And one of the reasons was, of course, their forward guidance, right? So we've heard that their forward guidance on cloud computing wasn't that great. And what do investors pay money to in the stock, right? Why do they invest? Well, they want to get a return on their investment, as I said earlier. And so one of the things we have to focus on, I'm going to go ahead and go to the QQQ, which is the NASDAQ Index ETF, and show you guys something. So we rallied really heavily with a lot of these tech stocks. And one of the things that becomes difficult once you have a huge rally in these tech stocks is seeing if the price that we're paying for these stocks match the valuations, right? That's why when the earnings seasons come, it's kind of like these stocks are facing the music, right? That's when the music comes, because at the end of the day, even if a company beats its earnings, like let's take a look at Microsoft, the main concern is not only just beating its earnings, of course it's forward guidance, but even if it beats its earnings, it still has to justify the high prices that we're paying for the company, right? Because let's say hypothetically a company is trading at $500, right? But the earnings comes in and the valuation, right, kind of shows us that it should really be trading at like $480. And even though it beat its expectations for revenues, the reality is the stock is priced higher than what it should be actually being paid or paid for, right? And so that's a concern. And then also along with Microsoft and Meta, we also had Google, right, who actually announced, and they had great earnings, right? They announced that their cloud services are up, their revenue and advertising is up. And so, it's important to pay attention to these tech giants. So we saw, Microsoft down, Google up. And so that was going to provide sideways movement for the market. And so let's go ahead and, finally look at Tesla from a technical standpoint. We saw that pretty much the day ended up sideways, right? We saw that we rallied up in the morning, we fell down. Of course, at 2 p.m. we had the news of the Fed hike, which was as expected, the 25 basis points. And then when we heard Jerome Powell speaking, we had things run up. And then, of course, as we got closer and towards the end of him speaking, things fell down because we heard about the outlook for labor softening, right? Now, this is a huge concern, especially for Tesla, right? Because why did Tesla fall down almost just a week ago, right? Well, one of the reasons Tesla recently fell down was because of forward guidance, right? We saw that we had this big red candlestick because we heard Elon Musk on the earnings call mention, hey, going into the next quarter, we may see, production stifling simply because we're going to have to do a lot of upgrades in our global factories, right? And obviously, that's something that isn't too good or isn't seen too well with investors. And I say this all the time, it's not that Tesla stock is a bad stock, it's just that, Wall Street is very myopic and they look at things quarter to quarter, right? And I know a lot of individuals who invest in Tesla long term, like myself, we talk about, the AI of having, fully self-driving and autonomous vehicles. We talk about the robotics with what Tesla's doing, and we talk about all these great things that Tesla's in the pipeline working on. But unfortunately, Wall Street doesn't care unless they see, they can't put an actual valuation on something because they don't see what it's earning, right? And so although Elon Musk is saying, hey, profit margins in the future are going to be getting boosted up because of fully self-driving, and by the end of the year, I think we'll get a lot closer, Wall Street doesn't care about that. Wall Street's just saying, hey, you're telling me you're not going to be able to produce as many vehicles. Well, hey, I don't like that. I'm going to sell, right? And, that's just Wall Street. At the end of the day, one of the things I talk about is that if you're going to trade and invest, you should only trade and invest in what you see value and not based on anyone else's opinion, not based on Wall Street's opinion, not based on my opinion, only in whatever you see value in. And so for Tesla, I am bullish on Tesla in the long term, but one of the concerns is how Tesla is going to be doing as we get closer to the next earnings, right? Because we know that, monetary policy is still high. Even though we're getting hiked by only 25 basis points, we're seeing that we still have a lot of, these previous rate hikes that are going to trickle into the economy, and that's going to continuously slow down demand, right? We're going to see unemployment, as Jerome Powell mentioned today, most likely tick upwards. So if more people are unemployed, less of them are going to, or less Americans are going to be spending money. And that means that there's less money that's going to contribute to these corporate earnings. And guess what investors are going to do, right? Right now we're seeing hits and misses. But if we go to Q3 and we see a lot of misses, well, we're going to see a lot of investors kind of pull out. They're going to be like, hey, this is not worth what I'm paying for. I'm going to be selling. And so that's one of the main issues because, we don't want to see the economy kind of fall on its back and see unemployment get too high, although the Fed does want that to a certain degree to lower inflation. Now, I know it's kind of complicated because on one end, the Federal Reserve has, this mandate to maximize employment, but on the other hand, they also have this mandate to, introduce price stability. And so it's kind of like this weird balance that you have in economics where you kind of have to bring something down to bring something else up. And so that's major. That's, one of the main concerns for Tesla going forward, right? Hey, right now Tesla is holding up, but what are we going to do in the next earnings when we see that there's less cars being produced? Now, transitioning from a technical aspect, one of the things I've also mentioned is that Tesla is kind of getting rejected or has been getting rejected by this descending trend line, right? And so, one of the things I pointed out is that I'm going to be watching for Tesla as we get closer to 206. Doesn't mean that we're going to fall down to 206, but I'm going to be watching to see if we do get to that level, what does Tesla end up doing, right? I want to see if Tesla touches this area where there's a lot of volume by price, where that means we're probably going to see some consolidation around here, as we see this was a resistance in the past, support in the past as well. So if Tesla continues falling down, we'll most likely find an area of support over here. And the main idea is watching to see what it does around this area. Is it going to bounce up or is it going to break below? Now, I know some individuals watch my videos and they're like, hey, I don't think Tesla's going to fall down there. Well, it's not guaranteed that Tesla's going to fall down there. But if we are trending downwards and we're seeing, you know, obviously the market kind of react differently, and kind of being a little pessimistic as we go to the third quarter for earnings. It's possible that we could see Tesla at this area, right? Not guaranteed, but it's possible. However, what if we break above this area? Well, if we break above this area, you know, then that could be good, especially because we know that there's little volume by price around over here, and that means that we could have huge movements once Tesla is finally above $313, right? But the struggle is going to be getting there. As we know, this descending trend line is going to continue presenting a challenge for Tesla from a technical aspect, right? And then we don't have any more catalyst events coming up. Again, maybe we could have some more updates with the Cybertruck finally, you know, just getting more positive news by it. But I don't think it's anything of much significance that could possibly push Tesla automatically above, you know, this area, right? And so I know it's kind of sounding like I'm a bit bearish on Tesla, but I'm not. I'm bullish on Tesla in the long term. These are just going to be buying opportunities, right? If you're a long-term investor. Now, for someone who's shorting Tesla, you know, we may have some great opportunities to short Tesla in the short term as well, but we'll have to go ahead and see, right? Because we did see that we had one big day kind of rallying upwards. However, again, a day selling off again, and then another day moving sideways. So, you know, although we had some decent earnings, there is some questions looming from a lot of, you know, investors how things are going to look going into the next quarter. And right now, it doesn't look too good. It looks like we may have a little bit of a soft landing where things aren't going to crash, but things aren't going to be the greatest either. But with that said, you know, I want you guys to let me know in the comment section down below, what are your thoughts on Tesla in the long term or in the short term? And also let me know, you know, what you guys are, you know, when you're talking about Tesla in the long term and the short term, what is your perspective? Are you talking about someone who's trading or someone who's investing in the long term? You know, I participate as a long-term investor, but I also trade Tesla in my short-term trading account, right? With that said, guys, hopefully you enjoyed this video. Make sure to check out the links in the description below, because one of the links is a link to the Push and Profit private group where you have access to my daily briefings where every day I call out trade ideas as well as the reasoning behind it. And I also provide updates on what's going on in the current market. So definitely check that out if you're interested. It's a one-time payment for lifetime access. So definitely take advantage of that. There is going to be a coupon link. And with that said, I'll see you guys on the next video. Take care.